Welcome to the Crypto Corner right here on Schwab Network. I'm Jenny Horne, and stablecoin news is moving fast and furious. And could you buy your next house using crypto? We'll get you caught up on some of this week's headlines. Here to help explain it all, Adam Lynch, director at Schwab Equity Research. So Adam, we've spoken about the Genius Act, what it means for stablecoins, and now passed through the Senate. And companies really are moving fast to establish these stablecoin positions. I mean, like hour by hour, we are seeing just companies trickle in. So Fiserv, Circle, among some of them. Tell us more about this and what was really landmark legislator.
Yeah, it has been fascinating to watch this develop over the last few weeks. The Genius Act passed through Congress last week. So now that we've got some sort of regulatory framework, the race is on. You mentioned Fiserv earlier this week, a Fortune 500 company like them, multinational fintech firm, announced their plans to launch a stablecoin called FIUSD. It's going to be launched on the Solana blockchain, and they're pitching this as programmable money, which moves around the clock, cutting friction, reducing costs, all of that fun stuff that comes with crypto. By the end of the year, they hope to launch not only this fiat-pegged stablecoin, but also a digital assets platform. In their announcement, they mentioned that all of this is being built with infrastructure from Paxos and Circle, like you mentioned, and the whole thing is going to slot into Fiserv's core banking stack. That thing processes nearly 90 billion transactions a year, catering to almost 1,000 financial clients like banks and credit unions and 6 million merchants worldwide. So it is massive, the reach that this will have. Circle, which we've mentioned a couple of times here, is going to be involved with all of this upcoming stablecoin activity. You can very rarely find the word stablecoin and not have it be connected in the same article to Circle. Circle is one that manages the stablecoin USDC. Stock has been absolutely on fire since the IPO earlier this month. Along with their USDC work, they also have infrastructure which helps third parties like Fiserv launch their own stablecoins. This trend is not slowing down anytime soon, simply just based on the amount of rumors that you hear out there about other companies which are making plans to launch these stablecoins. And then the other thing related to Circle and the Genius Act, which I think is somewhat interesting, is some in the industry actually see the Circle Act as a bit of the Genius Act, as a bit of an advantage for Circle, particularly relative to the other large USDC-based stablecoin issuer Tether. They have USDT. So Circle has always been known a little bit more for its regulatory compliance and transparency, particularly where it comes to the reserves that back the stablecoin. Tether, on the other hand, holds assets that are a little less transparent and may run afoul of some of the provisions in the new bill. There is, however, a 3-year window grace period, so none of this is going to happen near term, but I think it is worth keeping an eye on for the future.
Oh, no, absolutely. And I do feel like it's one of those, again, news cycles where you have to keep your eye on the wire because things are changing so rapidly. And payment stocks as well, like Mastercard, are also dipping their toes into this space too. So what does stablecoin really mean for some of these traditional legacy payment companies that have benefited from really the same structure for years, decades at this point?
Mm-hmm. Yeah, it's going to be fascinating. I think that this is the situation in the market which I'm most intrigued by. And the reason is just that Bitcoin, as well as all cryptocurrency, was created essentially based on being a peer-to-peer payment system, which eliminates the need for a middleman, often a middleman who takes some sort of cut from that transaction. These credit card companies have obviously served as that middleman. So how do firms like them kind of react and position themselves going forward? Earlier this week in the Wall Street Journal, there was actually an article titled "How Visa and Mastercard Can Survive the Stablecoin Threat." And their conclusion was by working with today's players. They can help with partnerships that facilitate payment, credit card issuance, settlement, cross-border payments, merchant acceptance. One of the biggest things that these companies have is the network of, where their card, be it Mastercard or Visa, is accepted, right? Pretty much everywhere. While some of these stable coins aren't going to have that sort of a benefit. So far, Mastercard's made the biggest move to date, recently announcing plans to integrate Fiserv's FIUSD stablecoin into a range of its payment products. So it should be interesting to see kind of how they do that. They're going to be launching a stable coin linked card for shared customers that they have. So then these consumers and businesses can make payments with FIUSD anywhere in the world that Mastercard is accepted. But all that being said, they've got a long way to go before stable coins replace this card network ecosystem. Visa's accepted pretty much everywhere. They've got 4.8 billion cards in circulation with consumers. So it's going to take years. I mean, if ever a stablecoin can kind of replicate that level of acceptance, being able to trust that your payment method will be accepted wherever you go is a competitive advantage that these companies are going to try to kind of hold on to and integrate into the way that they use and kind of work with the stablecoins.
Okay, and now here's a fun one, using crypto as a mortgage asset. So interesting. The Trump administration is looking into it. So explain this to us. Can homebuyers really expect to use crypto to buy their next house?
Possibly, assuming it's held on a U.S. regulated centralized exchange. That's where things are at right now. This is a landmark shift for the housing system. The Federal Housing Finance Agency, FHFA, ordered Fannie Mae and Freddie Mac to formally consider cryptocurrency as an asset in single-family mortgage risk assessments. So if you are going to take a single-family mortgage loan, you may be able to use this crypto as collateral. The government enterprises that support this stuff, Fannie and Freddie, they help support the U.S. home finance system by purchasing mortgages, packaging them, and selling those to investors. The order, though, directs them to develop proposals that include digital assets. And the key thing here is it includes digital assets without requiring the borrower to, say, liquidate them into US dollars before the loan closes. So historically, crypto has been completely excluded from the underwriting framework due to volatility, regulatory uncertainty, the inability to easily sort of identify the reserves, and this directive changes all of that. And as the head of the FHFA stated yesterday, it aligns completely with President Trump's vision of making U.S. the crypto capital of the world.
Yeah, and I can't wait to see it. I feel like it's been such an exciting time to follow this space, and thankfully we have this weekly time to discuss the latest, and there's been definitely a plethora of news. So thank you so much, Adam Lynch, for all of the insight. But want more Crypto Corner? Be sure to subscribe to Schwab Network's YouTube channel. I'm Jenny Horne. We'll see you next time.